Good morning from Chicago traders. It is Thursday, the 1st of October, 2015, 8 a.m. Central Time, Chicago time. As always, thanks for joining. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not indicative of future results. Just a couple of news items. Better than expected China data buoys the markets overnight. European manufacturing PMIs disappoint, but still the market held up. Initial jobless claims came out at 7:30 about a half hour ago. 277,000 versus 271,000 estimated, so a little higher than expected, which higher in initial claims means more people out of work. Continuing claims 2.19 versus 2.23. The only other item I have left that could play today is that reportedly semiconductor firms are concerned that Apple may trim orders in Q4. They're saying that these are suppliers. They're saying that the iPhone 6s shipments could fall to 65 to 70 million units in Q4 from 75 to 80 units in Q3. We've seen weakness in the NQ and in Apple. In fact, Apple stock, there it is, drop on Tuesday. Yesterday was an inside day. I used the same principles, composites. Let's see, let's switch over here. So I use the same principles for stocks as I do for futures. It's the same auction. Apple is very liquid, and so it auctions fairly it behaves fairly well with volume profiling. And you can see that Tuesday we had a big drop, and then yesterday was an inside day. I'm looking for this 107.86 to be taken out. Now I'm looking for a test of 104.25 actually. Was not able to take back the balanced composite point of control at 113.86. That's Apple. Anyway, if we look at what's expected for today, looking ahead, we've got at 8:45 Central, we're looking for manufacturing PMI final. The estimate's 53.0. Again, that's 8:45, 9:45 Eastern. And then at 9 Central, 10 Eastern, we're looking for construction spending month-on-month increase of 0.5%. We're looking for ISM manufacturing at that time as well, 50.6. We're looking for ISM prices paid. Also at 9 Central, 10 Eastern, looking for 40. And then at 9:30 Central, 10:30 Eastern, we're looking for natty gas, expecting 101. Other than that, we have a couple of speakers. Fed Speaker Lockhart at the Labor Market Conference at noon Central, 1 Eastern, and Fed Speaker Williams delivering an outlook speech at 2:30 Eastern, 1:30 Central. You want to keep an ear out for those on your news feed. Other than that, let's take a look at what it did yesterday versus what we expected. Overall, yesterday the expectation was for the key expectation was for to open out of range, responsive selling down into this 86 area, if not down to 80.50, which is the prior day's value high. Remember, the prior day had a completely Gaussian profile and basically a beautiful, right out of the textbook, normal distribution. But the overall expectation is for it to turn over, to turn around and push towards 1911.50. That was hypo 1. Hypo 2, we take out the overnight high early. We chop around, and then we're looking for it to fall into the range, potentially testing the 74, 75, 74, 50 below. It did hypo one. It did it backwards. It pushed up off the open, and to a lot of people, I know there's a lot of discussion about it in the S5 chat room. To a lot of people, this 10-point move up, the opening swing, you could see here it's 94.50 to 04.50, which is 10 points, and that is more than what's normally expected for this product. And a lot of folks got confused by this and felt that it was an open drive. However, it was not, because there was really not that much aggression. So if you were watching the book and how it was trading, price was moving up on little volume, which means there's a lot more. There was a lot more cancel and offer higher activity as opposed to bids aggressively lifting the market. And when bids lift the market aggressively, you see some large delta bars down here. So I was looking for this to turn over. I was looking for an open auction, okay, out of range. Open auction out of range. Why do we need to know the opening type? We need to know the opening type because it helps us identify who is participating early on. I can't write very well on this thing. It's terrible. It tells you who's participating early on and what the market sentiment is. In other words, the opening type helps us guess a little better, and that's what it is. It's just a guess. Pretty much everything is a guess here. We're playing probabilities. There's no certainty to what we do. I know a lot of people don't like that about trading, but that's at its core, that's what trading is. As soon as we see that the market's allowed to roll all the way over like this, almost to the open, and this was only about 41 minutes in, so we still have a swing that we're looking for. As soon as we see that it's rolling over, it takes away the open drive. So open drive as the opening type gets scrapped. There was no test. If this was an open test drive up, we would have seen a small test and then very aggressive buying up. So OTD, open test drive, opening type, also gets scrapped. So that leaves us with open, rejection, reverse, which means that the market is likely to open in a directional way and then quickly reject back, or open in the other direction and quickly reject up. And why is this important? Why do we care about this? Why am I talking about it? If we can identify the mood early on, it helps us decide whether we want to take breakouts, we want to take pullbacks in the direction of the move. If this was an open drive or an open test drive, then we would be looking for a shallow pullback. We want to get on that shallow pullback and ride this for a trending type of configuration. When we see an open drive, generally it means a much higher time frame. The type of time frame that does not care about yesterday's high or low or whatever. It just runs for 30, 40 points. And those are the big trend days, and we want to identify that as early as possible. That's why opening types are very important, and that's why I post in Twitter as much as I can the opening type and the opening swing. But as soon as it rolls over like this, now I'm looking for an open reverse, rejection reverse, which means that it's likely to gain momentum on the downside, but then as it snakes back up, it confirms OAOR, which means that on this day, I don't want to be looking at breakouts, and I don't want to be trading from the center in or from the inside out, meaning I don't want to be trading, initiating positions in the middle of the range and then sitting through a lot of heat. So you could see it getting stuck in the middle a lot, in the middle of the OS a lot. Spent a lot of time there because the controlling participant in there is mostly short term with some bursts of long-term traders hopping in here at whatever times that suit them. The biggest thing we saw yesterday is right here. We saw it push through to the 86.50 again. We're looking for an 86, 80, 80.50 or 81.50 test. Could not quite get in there. But we saw that it pulled right into the prior day's high. This is the prior day's high. Okay. at 89.75, and then we saw a swift rejection that was a 10-point move from 86.50 to 96.75. It seems small because the scale is fairly small here, but as I expand this out, you can see that this rotation was 10.25 points, and this, to me, this was rejection right here. This was there was dry up on the way down, and we could see it in we could see the liquidity as the market moved down. We could see the liquidity on the bid starting to increase, and then the prints on the bid starting to decrease. So this created an opportunity here back to the mid. You could see a test to the mid to the tick, and then it lingered, and then we looked for the break, and then now we're looking for a break to the other side, right? So given OAOR open, given rejection of the prior day's range after a big test on a gap up, so we closed the gap zone. This would have been the gap zone here. The gap zone was between the open and the prior day's high. We closed that gap zone. We have not touched the closing price, so we haven't closed the gap close has not been touched yet, so that remains below. By that I mean 84.75 right down here. This is the prior day's close and the prior day's most valuable price. And so that stays open. So there's some structure there that's still weak from an auction perspective. But overall, we're looking for the market to retake the IB high and push towards that 1911 area. It got to 1910.50 before it settled in the middle. Notice the large high volume node here. There was a lot of interest at the high. That was a sort of an incomplete auction. We have a weak high here, so overnight expected it to break higher overnight and take out yesterday's high overnight, and it did so. So let's check on the overnight session. There it is. It really broke overnight. So we get into the China PMI numbers, and we have a big break upwards, 29.50. And so that hasn't completed yesterday's auction, and notice that it comes all the way back, right back to yesterday's high. So we are basically resuming yesterday's auction this morning. This leaves us with a very odd situation for our hypos. Okay, the overnight session shows multiple distributions. And we are trading in the middle distribution with a point of control right in the middle of the range. This is another thing that supports the choppy hypothesis. The overnight high is quite far. The overnight low is down at 1901 quarter, which is exactly yesterday's, which is basically yesterday's point of control. The expectation here is it's likely to pull back to 1901 quarter in the early part of the session. So as we come into today, and to piece the last part together, if we look at the last few days, this is Apple, this is the ES. If we look at the last couple of days, so what have we done? We have rallied up to 2011.75. We broke lower for a couple of days, then bounced for 2 days, then we broke lower and bounced for 2 days. We tried to break lower after that. We couldn't, so we pushed up. And so we have 4 days of balance last week. And then this week, we broke lower for 2 days and bounced for 2 days. And then yesterday adds to that bounce. So I will extend this micro composite, which if you recall yesterday, I said again, the 92 area is in play again. Yesterday, there's a big attraction to 74.75, which we couldn't get to, and that weak structure is likely to be tested at some point soon. But overall, yesterday was still imbalanced, so we include that in our microcomposite, and look at what happens to the microcomposite. All of a sudden, we have a very pronounced double distribution profile, and so again, that 92 really important. This 92 area becomes really important. It's basically the over-under line. A push below 92 and the inability push back up. As soon as it starts to go down, that is a trade opportunity, in my opinion, to target 74, 75 from the 90, 92 area. That's a fair amount of distance, but that's what we're looking for. If it does break through the 92, that's a very, very plain vanilla setup in using auction theory, using market profile or volume profiling. Once we break through the cutoff line between the two distributions, then the market's likely to test the most valuable price below. So for today, as far as the hypotheses are concerned, today we're opening up here. I'm assuming this is where we'll end up opening. I know I'm over my time here. And the expectation is for it to get responsive selling back towards the 1901 this morning. We have some numbers at 8:45 and 9 o'clock. We have some speakers in the afternoon, but overall I expect it to become responsive again in balance. Why? Part of the reason why is because even though risk on dominated the session, the Asian session, as we saw in the overnight profile, we still have a huge number tomorrow. We have non-farm payrolls, the unemployment number coming in tomorrow. Don't forget about that. That's likely to govern today's session. I don't see, with it having pushed up and back down, I don't see how someone can sustain putting on more risk today. I think today it's more likely to balance out as hedgers use the futures to protect their positions. But overall, I expect it to chop around and get back into the prior day's range and settle it out and balance for one more day before we have the energy to break out one way or the other. So my primary hypothesis is it's likely to try higher towards the 1718 and then fall through down to 1901 quarter. That's the primary idea based on the probability of the market opening and pushing up in an initiative way, meaning away from the most recent value or balance, versus the probability of the market likely to try to push and then fail and pull back. There's a huge magnet down here and below at 74, and I think that's what's likely to attract price. But if it doesn't, that's cool. The idea is not to be accurate or to be right. The idea is to have an idea of what's likely to happen and then have a course of action. So once the market decides on the bias, I don't get to decide on the bias. The market does, the participants. The aggregate or the combination of all participants and the aggressiveness of their participation in the form of buying and selling at different prices tells me which direction I should take. That's why we have multiple hypos, right? So we have a hypo 1, which I just covered, but we also have hypo 2, 3, and then usually there's 4 and 5, and all we're looking for is which one is likely to play out. Once we see which one plays out, how does that help us, since it just seems like there are 5 guesses, but it beats the heck out of coming in here and saying I'll play with intuition, I'll play it from the gut. Playing it from the gut, generally, unless you have a tremendous amount of experience or are scalping, generally playing it from the gut is not a viable plan, because when you play it from the gut and things go wrong, there's no way to track what went wrong and what part of your plan you need to change, because playing it from the gut basically says that there's no plan. But if I come in with hypos and my expectation is for it to try higher and push lower and back into 1901, and I see day after day that the higher probability play is not working, then I know I need to address hypo 1. I know I need to go back and research what has changed, how's the market adapted, and what participants are causing this, and then I can adjust hypo 1. I can localize it to which plan did not work, as opposed to just not having a plan at all. Also, having a plan in a hypo tells me that if I do see the type of action, I do see that it's resisted at 17.5, 18, and it's starting to roll over, then I know, okay, immediately, 1901 is my target. So I know if I get short, I need to work something ahead of the 1901 key target, and I know what's ahead of it. I know that 1903 closes ahead of it, and I know that if it does push through, then I'm looking at other areas like 74 below. Remember the 92 down here as well. So it'll be the 1903, 1901, and then 92 as the next area of support. So I have a plan. I'm not sitting here trying to figure it out while I'm in a trade or while I've initiated the trade, and I'm thinking about what to put in as far as orders at the highest, at the riskiest part of the trade, which is when you first initiate it. It's kind of like when a plane takes off. That's the riskiest part of something going wrong. Um, that's the riskiest part to you as a passenger. And then once it levels off, once the trade starts working, then you can just relax and be objective about the market. Anyway, that's my primary hypo. I've run out of time to talk about other things, but I wanted to cover real quick. We have a public AAQ at noon Central, 1 Eastern. I've received a ton of questions. I'm going to summarize these questions and push through them today. But the other thing, there are a lot of classic questions or repetitive questions that we deal with all the time. You know, how do you initiate a trade? How do you use all these pieces from the different parts of the profile? And so we have those classic ones, but we also have questions regarding trading in general, which are important. But the other thing I want to cover is there's a study. I'm going to show you a study that was done just yesterday. I was checking someone's homework, and I completed a study that offered some statistics that I think you'll be interested in. Stuff that shows us an edge in the market, a statistical edge in the market. So I'll cover that during the webinar. The webinar will probably be an hour to an hour and a half. By the time I get through all the material, and it's a public service, so no expectation. It will be recorded, and you can hear it at a later date. Just be sure to click on that page on Twitter that gives you the invite. There's a section in there where you can submit your question, and there's also a way to be added to the mailing list on futurestrader71.com so that I can send you the recording once it is out. If you have any questions, it's fairly easy. Just go to futurestrader71.com, hit the contact link, and send me something, or get a hold of me on Twitter by writing to @futurestrader71, and I'll do my best to get back to you, or someone who's helping will try to respond in my place. Good luck today. I know that's a lot to cover this morning. Good luck today, and I'll catch you at noon at the webinar. Take care.